Hi everybody, it's Peter Schiff. This is Saturday, April 9th, 2011. Well, late last night, down to the 11th hour, President, Congress came to a compromise to avert the feared government shutdown. You know, I never believed that the government would shut down. I believed that politics would prevail over principle, and that is exactly what happened. And of course, as I predicted, both sides are now claiming victory, that this new compromise demonstrates the resolve of our leaders to make the necessary cuts so that America could live within its means and finally tackle our out-of-control deficit spending. Well, the reality is this compromise proves the exact opposite, that there is no will on Capitol Hill to do anything about the deficit, that nobody is willing to make any of the cuts necessary to rein in the excesses in Washington. What did our leaders agree? They agreed to reduce the 2011 deficit by $38 billion. That's it. $38 billion represents 1% of what the government is spending in 2011. It represents less than 2.5% of the deficit for that year. Now, our leaders are telling us that this demonstrates our resolve, that after all, if we can't agree on at least these cuts, if we can't agree on this small down payment, well, how are we going to convince the world that we're going to tackle the rest of the problem? Well, I think the perception is going to be just the opposite. If this is the best we could do, if all this rhetoric, right, on both sides, very heated, if all we can do is this tiny little cut, I think what that shows is that any pretense that America is ever going to do anything about getting its fiscal house in order goes out the window. We're not going to do anything. Instead, our fiscal house is going to crumble. The only thing that will force politicians to do anything in the way of cuts is in the aftermath of an economic crisis, which clearly is coming. A budget crisis, a currency crisis, sovereign debt. It is coming, and that's the only time where the U.S. will act. In fact, if you look at what happened in the markets, the dollar had a terrible week. The dollar index closed below 75. That's a new low for the move. Many currencies made new 52-week or record highs. Aussie dollar, Canadian dollar, Swiss franc. Gold made a record high. Silver made a new 31-year high. The CRB index closed at a new 2.5-year high. The gold and silver stock index, the Huey, hit a new record high, well above 600 now. Oil prices, I think on Friday, were up another $2.50 to close just shy of $113 a barrel. And you know, the fact that the dollar is losing value and that prices are rising is not a coincidence. It's a cause and effect relationship. When the dollar loses value, prices go up. The question is, why is the dollar losing value? It's losing value because the Fed is making too many of them. And why are they making so many dollars? Because they're monetizing debt. Because we have a huge deficit and the Fed is buying the bonds by creating money. Now, unfortunately, none of the Republicans who are criticizing the deficit spending put it in those terms. Let American people know the consequence of Washington not getting control of the deficit is that the cost of living is going to go up. That food prices, that energy prices, that clothing prices, that the price of everything that we need to buy is going to go up precisely because we're running these deficits. And you know, what's so amazing is you've got all these experts out there that are literally scratching their heads trying to figure out if the increase in commodity prices might cause inflation. I mean, the whole mental exercise is useless. Rising commodity prices are the manifestation of inflation. They are the result, the consequence of the inflation that has already been created. It's already here. The Fed created it. And the future increases in prices are going to result from the fact that we keep creating inflation. You know, I was on CNBC Fast Money the other day. You can see the interview up on YouTube. And they asked me, why are oil prices rising? And of course, I've been buying oil for 10 years, and the reason oil prices are rising is because the dollar is losing value. Because the Fed is printing so much money, we need more money to buy oil. Now, one of my, nameless YouTube critics, although I think I know who he is, but anyway, I try to make fun of me for saying I don't understand basic economics because the value of the dollar, how much money we print, has nothing to do with oil prices. He maintains that oil prices are rising because of supply and demand. Well, precisely. The problem is my critic doesn't understand the demand curve, doesn't understand basic economics, because money supply affects the demand curve. It actually shifts it. Where does the demand coming from to buy all this oil? It's coming from all the money that people now have to spend to demand oil. I'll give you a very simple analogy. Maybe my critic won't be able to understand it, but everybody else should. Let's assume that there's an auction, and we have 100 people at the auction, and everybody brings $100. And let's say there's 100 things to sell. Well, how much demand is there for these products? Well, the most anybody can pay is $100 because that's all anybody has. So you're not going to see the price of something go for over 100. Now, what about if you take the same people, same auction, same amount of merchandise, but instead of $100, everybody brings $1,000? Well, what would you expect? Well, prices are going to be a lot higher where everybody has $1,000 than where everybody has $100. Why? Well, because there's more demand. Well, where'd the extra demand from? It's the same people, it's the same stuff. Well, they have more money, right? Now, if the supply changed, if you increase the supply, then you wouldn't have as big of an effect on price. But as long as the price is the same and everybody's got more money, demand is higher, supply doesn't move, so the supply and demand curve intersect at a different point, and you get a higher price. And that is exactly what is happening. You know, also, we heard this week on Friday, the president of the Dallas Federal Reserve, Richard Fisher, listen to what Dick Fisher had to say about debt monetization. I'm quoting him exactly, I'm reading it. Quote, "Our duty is most distinctly not to monetize, or even to be perceived as monetizing the debt of a fiscally imprudent government. Throughout the history of nations, monetizing the budgetary excesses of governments has proven to be a direct path to economic perdition. Having already peeked inside the door, I feel strongly that we must now shut it, lock it, and throw away the key." Who is he kidding? Peeked in the door's been wide open. It's obvious that we are monetizing the debt. It's not just a perception, it's what the Fed is saying it's doing. I mean, Ben Bernanke went on 60 Minutes and said he's monetizing the debt. I mean, the next time he went on, he tried to backtrack it, but it's out there. In fact, if you listen to the rhetoric on Capitol Hill or even on Wall Street, the reason everybody is so sanguine that we don't have to worry about a Greek-style fiscal crisis in this country is because the Federal Reserve can monetize the debt. But here you have Dick Fisher saying that the Fed should not do that, that that's worse, and he's right. The problem is nobody is listening to him, at least nobody in Washington. I think people all around the world might be listening to it. That's why they're selling the dollar. That's why they're getting out of treasuries. You know, it's interesting that there are some people that are criticizing the Fed for being too easy. But the criticism is usually wrong. What they're saying is that the economic recovery is underway. It's self-sustaining, that we no longer need the emergency measures that we needed during the height of the crisis. Well, that's not true. The fact of the matter is, the economic recovery, the phony recovery that we got going right now, is a direct function of the Fed having the monetary pedal to the metal. The minute it takes its foot off the gas, the recovery is going to stall. In fact, we'll be right back in recession. But that doesn't mean the Fed shouldn't raise rates just because it's going to bring on a recession. Because the recession we're going to get from raising rates is nothing compared to the recession we're going to get from not raising rates. And that is the problem. The longer we wait to do the right thing, the more painful it's going to be when we ultimately do the right thing. Now, the ECB, they raised rates this week. They raised rates from 1% to 1.25%. A lot of people criticize the ECB for being too aggressive. I think they're still too loose. I think they should have raised more. I think they're behind the curve. They're just not as far behind as the Fed. Now, they're going to raise rates quite a bit more, I think, in the months ahead. The British, they punted. They didn't raise rates. That was a mistake. But raising rates is the right thing to do. I still think that central banks are being too timid in the rate at which they raise rates, and as a result, there will be more inflation than had they been more vigilant. But the fact of the matter is, the Fed is doing nothing. The Fed is doing exactly what Dick Fisher is saying that they shouldn't do, and the consequences will be dire. And I think we're going to see this in the currency markets, maybe even as soon as next week. We'll see if we see it in the bond market. Interest rates have been inching higher recently, although not nearly as much as I believe they should. So we'll see how the market reacts to, again, what I think is very bad news coming out of Washington. Now, there will be some more rhetoric about the debt ceiling, the debt limit. That's the next big vote. I expect that Congress will once again irresponsibly and recklessly vote to increase the debt ceiling because, again, there is no resolve, as this ridiculous charade demonstrates, where they were arguing between $30 billion and $60 billion worth of cuts. They're arguing over a rounding error in a budget deficit, which, of course, is actually going to be a lot worse than they're projecting over the years because the economy is going to be weaker, unemployment is going to be higher, inflation is going to be higher, interest rates are going to be higher than the rosy scenarios assumed in the budget. So stay tuned. It should be an interesting week. Don't forget, tune in every day to my radio show, The Peter Schiff Show, on SchiffRadio.com to get blow-by-blow coverage of the markets over the weeks as I believe the situation in America continues to deteriorate. Anyway, that's all for now. I guess let's enjoy our weekends, everybody. Take care.